What's your take as well?
Well, I would say that the December number was actually giving us a lot of confidence in terms of growth momentum bottoming out and possibly picking up further, especially with the help of more policy easing in Jan that we have seen the last 2 to 3 weeks. I would say that we are now turning more bullish, definitely on growth.
Yeah, 6.9%, I just had a look, is the second biggest reading in terms of growth there over the last 2 years or so. You mentioned something's happening in southern China, this industrial rebound there, steel and cement. Can you elaborate more a little bit on that?
Yes, I think that starting from October and increasingly in November, and I guess most prominently in December, we have seen that IP demand has been picking up. And the commodity in particular has seen some inventory clear out and also more demand coming out, especially from southern China. We at the very beginning thought this is probably just a temporary thing because, it has been drier than usual. And also, the people probably are waiting to front load some of the orders, given that the Lunar New Year is particularly early this year. If you are thinking that migrant workers have to head home about 10 or 12 days after the calendar year, right, you probably need to get most of the things done in the fourth quarter. So we thought that was probably temporary, but so far it looks like that even coming into the first quarter, we still saw that, for example, cement and also steel names and holding up pretty well in terms of orders and production.
The retail sales, we've held around 8%. Is this a sign of stabilization, do you think, or do you think the inflation pickup we've seen is offsetting the actual sales, actually?
It's definitely both. We think that CPI inflation coming up, partly because of the food price inflation, is going to partly explain that. But also at the same time, I would say that the overall consumption momentum has held up reasonably okay. Imagine that at the round, I would say, late summer, early August time, early October, early September, October time, we were looking at retail sales and saying that at the same time, when CPI inflation was coming up, retail sales wasn't actually still, slowing. But now we have seen that kind of, easing momentum is behind us, and we're seeing stabilization and possibly better ones going into January.
Just to more on what David was really alluding to here, what are the drivers? You mentioned stimulus, you mentioned the easing, but is the consumer coming back? The retail sales number, as Yvonne was pointing out, has stabilized. So give us an overall picture.
In fact, we do think that the growth momentum has come back, probably helped the most by, at the moment, industrial demand. And consumers are probably still doing the most heavy lifting by stabilizing. But
as we saw in that import data,
yes,
certainly.
Yes, absolutely. And going forward, however, we think that policy easing, especially in the in late December, early January, if continued, will give us a lot of boost to the upside and possibly through infrastructure. That's why we upgraded our GDP forecast for 2020 from 5.6% to 5.8% last Friday.
One of the drivers that you mentioned was behind that revision of the forecast was you were assuming the tariffs would get taken out from the deal. They didn't get taken out, and it seems they'll be in place as well. Does that affect your forecast still?
Well, we think that not all the tariffs will be rolled back. Only part of that will do. So we're still here to see whether that's 15% on 112 billion in September will be rolled back to 7.5. But that's as much as what we put in for the current forecast. Okay. So in the previous version in November, we thought that nothing will be rolled back. But apparently that there could be some hope for a little bit of that to be removed. But going forward, we still think that the trade deal, which was signed yesterday, was probably not too much going to lead to a substantial, step forward towards a phase 2 and an ultimate kind of removal of all additional tariffs. At best, we're going to see a truce probably until the end of this year, i.e., presidential election is over, and then we look at it again.
You've been debating, or there's been debate out there about whether the slowdown we've seen in China, is it something that signs of cyclical kind of turn, or is it more something that is structural? Where are you on this debate now?
I think there was a lot of debate, first of all, about 6% above or below. And it looks like, a magical number, right, or about this level. But in fact, we think it's definitely what you said is much more interesting, which is we all know about the slowdown, and probably this is inevitable. But how much of it is structural and how much of it is cyclical? We think it's a combination of both. But interestingly, a lot of people seem to only agree with one side of it. For example, those who said that it's only structural, so we should do nothing about the counter-cyclical policy adjustment. We disagree. We think it's all warranted and they should do more.